Hello again and good day to you. Welcome to lecture number 13. This is Fleet Life Cycle stage number 5, risk management. In the previous lectures, we've taken you through vehicle selection, not to mention the fleet policy. After procurement was finance management. Now that you've financed your vehicles, you need to take care of the risk. Firstly, you identify the risk, evaluate the risk, which means you decide exactly what you are up against as far as risk is concerned. You control the risk after that through financing it, which could be done in two ways. You either transfer the risk to a broker who's using an underwriter, for example, to underwrite your risk, or retain the risk through a self-insurance fund within the company. I'll tell you how that works shortly. You don't want a situation where you've just purchased your vehicles through whatever financing method that you've used. All of a sudden you find yourself with an insurance. You've just got comprehensive insurance. Let's call it that for now. So how does that happen? There's two ways that insurance will work, just to simplify the discussion. You will either underwrite through an insurance company or via their broker, or even use a self-insurance fund. So that self-insurance fund is made up of calculations per annum or over a 4-year period, whatever the case, but it's normally done over 12 months initially. Your total insurance risk profile is put on the table and is analyzed to say, going forward, what are you likely to suffer as far as insurance incidents are concerned? Then you quantify that into figures. If, for example, you have 10 vehicles, and those vehicles are worth R1,000,000, you could maybe put aside R100,000, so that each and every time you have an accident or a bumper basher or a windscreen replacement, you just draw from the fund. So that's basically how a self-fund works. And let's get to what types of vehicle insurances are there. Firstly, you could be insured comprehensively, which means that for every incident and occurrence that you may ever think of, you would be covered comprehensively. Even if someone's calling you and trying to sell you insurance, this is what they would be offering you, because this is what is most needed for most companies or even individuals. Fire and theft excludes damage of own vehicle in an accident, especially by your own cause or by your own fault, and it also excludes third-party damage. So if you had to veer off the road, have an accident, or one of your drivers veers off the road, has an accident, car rolls, is written off, you're not covered for that own risk, which is having an accident. So in this case, you would not be covered for an own accident. So you have to find a way to get that vehicle repaired or replaced, so you've lost. On the third one, damage to third party, fire and theft. This one includes own accident. An example here would be that if you hit a third party, you are not covered for that. You would have to foot your own bill to repair your own vehicle. You are covered for third party, damage to third party, but you are not covered for your own damage. So that's also a risk. You need to manage utilization of the vehicles. The more the vehicles are out there driving, even for things that are drivers' personal issues, the risk is still yours. So you need to minimize that risk. So you need to manage utilization, that vehicles are used for the purpose which they are meant for, which is doing company work. So utilization is very important. So you could have vehicle tracking, which actually analyzes what the vehicle does during the day, from the time it starts, where it went to, how many stops it made, up to the time it returns to the yard or to the premises. You are managing utilization there, because then not only that you are exposed to more risk there, but there's fuel, there's wear and tear, there's maintenance, that by this implication you've got additional costs that need to be looked after at the end of the day. Accident management is where you actually analyze each and every incident that occurs with the vehicles that are insured, so that you actually keep a record. Could be an accident, could be a driver reversed on a pole, could be a third party hit your driver. So these need to be recorded and listed according to each peril or incident category or occurrence. So you need to understand that in the month you've had 3 driver hit third party, or 2 third party hit your own driver, or hit a pole, or veered off the road, or vehicle rolled, and so on. You need to list them like that. That accident management, the rest of the detail that relates to accident management is going to be discussed a little bit later on. I was just bringing this up just for understanding at this point in time. Driver license management is important. Have you ever come across a situation where you may have, where a driver has had an accident or almost had an accident or has been stopped by traffic cops, gotten a traffic fine, only to find out that your driver's license expired 2 months ago. That is a big risk for your business, especially in cases where there was a fatality in the accident which he caused, and that liability comes straight to either him, but because the vehicle is registered in your company name, that liability comes straight to you. It is your responsibility. So you need to make sure that driver licenses are inspected and drivers are kept abreast as far as the expiry of their licenses so they can keep renewing them. You also need to have a process whereby you manage breakdowns and roadside assistance. This could be either through your own internal cost center or an external service provider who's been appointed to look after things like this, who could be called 24/7 to respond to breakdowns and roadside assistance. Again, it goes back to that as well. Roadside assistance could be as a result of recovery from an accident. So how do you recover from accidents? So you need to cover that loop there. Fraud and theft management is also a serious issue that needs to be given attention as far as risks are concerned. Traffic fine management is also an issue where you may have a proxy in your company who actually takes care of all that has to do with licensing of vehicles and actually takes ownership of the environment where vehicles are not licensed, are not roadworthy, there are traffic fines, to an extent that when authorities come to the company with warrants of arrest because of traffic fines that have not been paid, he could even be arrested. So that's very important that when drivers get traffic fines, wherever they are driving, for whatever reason, they disclose to the company and they know the process within which these traffic fines are managed. The same with licenses. Driver management interventions is where you have continuous improvement interventions that assist drivers to be better drivers in the company, to be more responsible, to be more aware of safety issues, to take more precautions when they are driving. This is something that shows that you care as the owner of the vehicles, as the owner of the fleet, as the employer. So you need to have interventions to assist drivers. Abuse and vehicle misuse is actually a serious one and can be twofold. One, drivers can really be misusing vehicles, which needs to be controlled, where from when they start them, the harsh starting, the harsh acceleration, the harsh driving, the harsh cornering, and everything is just, it's just so terrible that does this guy really care about these vehicles? He probably doesn't, and you shouldn't be having drivers like that in your fleet. That's the first point. Now, that abuse and misuse of vehicles means that you are going to be paying more for fuel, for maintenance, wear and tear. The second point is that it is actually quite possible that through negligence of the fleet supervisors in the fleet department, that what was reported by a driver at some point in time was actually neglected. The driver may have said that this vehicle is emitting smoke from the exhaust pipe. He may have said that there's an extra clicking noise in the engine somewhere. He doesn't know what it is. And then you continue to say to the driver, just do this one trip or these 2 last trips until the end of this week. And then all of a sudden, you've got a gearbox collapse. It is not his fault. He has been asked to use a vehicle that was giving signs that something's wrong with it. So you need to guard against that. Let's take a look at how financing risk through an insurance underwriter is done. Here we'll mostly talk about insurance costs per vehicle. You may have come across a situation where you go into a dealership to purchase a vehicle, even on an individual capacity, even 5 or 10 vehicles as a company. You sit in front of the sales representative guy at the dealership. He also says to you, do you have insurance? Then you say, no, I don't have. You can organize me. I can tell you now, that is the most expensive insurance you're going to pay for. If you are not involved in the sourcing of that insurance, it is the most you're going to pay for. Always source your own. Always look for your own. Here's a scenario. A vehicle is 100,000 rands, and his answer to you was that, okay, you're going to pay 583.33 cents per month. Now, if you multiply that by 12, that is 7,000. That's all he's told you right there. The most important part, which is there, he will never tell you. Even if you had gone to the insurance company or their broker, they will never tell you that part, because that's the most important part. That is where their margins are sitting. That is where you get ripped off. So how you need to understand that is, that part is not important. This is what is important. You've just been given that 583. So just from calculations, insurance rates will range from between 2%, which is for the wealthy and affluent with lots of high net worth assets, to about 8. Sometimes they'll move up to about 15%, which is very expensive. In this example, you actually take the 100,000, which is the value of the vehicle, retail price of the vehicle. You multiply that. You need to keep searching. You multiply it by 5%, 6%, 7%, 8%, until you get to that figure which he gave you as your annual premium or your monthly premium after calculating it. In that example there, now you know the 7,000 rand is a product of the 7%. So you know the rate you're being charged is 7%. That is expensive. You could be somewhere around 4%, 5%, especially commanding a fleet of about 10, 15, with an insurance history that's not so bad. So if we consider 7% to be a high rate, try and get more prices from other insurance brokers and underwriters. And again, after you do that, the insurance company may turn around. Okay, 333. What they have done there is they've given you a 4% rate. Again, with the same calculation, just take that amount, which is the retail price of the vehicle, multiplied by 4%, 5%, and so on, until you get to the 4,000. Divide that by 12, you get the monthly premium. So when you get that figure there, you know exactly that I've been charged 4%, which is not a bad rate at all. So you may accept that, depending how rates work in your country. In South Africa, that's a very good rate. Just imagine saving 3,000 rand per annum per vehicle, and you got 50 of them. That's 150,000 rand just on insurance. What about fuel? What about maintenance? What about tires? What about training drivers, driver interventions to get them to drive your vehicles better? This is an exercise. Calculate the insurance rates for all your vehicles, and if it is not justified, find an alternative broker or insurance underwriter. Okay, put it simple. Here's another thing that I need to share with you. Your loss ratio should be below 10% of capital asset value. If you have 10 vehicles worth 1 million rands, you need to be spending less than 10% of that capital asset value to fix those vehicles for the accidents they've had or whatever they have suffered. Now the problem arises where if you are self-insured and you have put 100,000 on the side in the fund for insurance, and you suffer one big loss like one vehicle stolen and you need to replace it, it's 100,000. You've lost 10% already. What do you do with the other repairs that will be needed on the other 9 vehicles? A self-insurance fund may not be the best for companies where the smaller fleets. It is better if you have a much bigger fleet. And in this one, you need to understand that the fleet manager has to have an internal accident management and driver safety program. Its benefits is that it provides the company with administrative and cost control assistance regarding entire driver management, vehicle loss, and damage claims process. If we're talking about the accident management program, what is it that needs to happen there exactly? You need to have it drafted as part of the policy so that you have a process in case there's an accident that happens. Assisting the driver telephonically at the accident scene. Arranging the driver's vehicle to be towed by a reputable towing company. Arranging driver assistance and emergency assistance at the scene of the accident. Requesting and reviewing repair quotations for correctness. Do not just accept quotations. A quotation that was given to you initially at assessment stage by the prospective repairer may be different from the final invoice that you get. Directing the vehicle to an approved panel beater. Communicating all necessary information internally if costs need to be passed to staff. At fleet policy stage, we discussed how important it is that all costs that relate to driver, if it's fuel, if it's maintenance, and in this case, to repair a vehicle, it could be an excess that is due to the driver because it is their own fault that the accident happened. So that's got to be documented in the policy. You can't surprise the drivers all of a sudden he finds himself having to pay a hefty excess because he's had an accident. If it's not in the policy, then he cannot pay, which is why it's important there should be a policy. The next point is that you need to liaise with insurance companies or company fund manager if you are self-insured for the process that needs to be taken and progress thereof after a vehicle has been taken in. Arranging courtesy or hire vehicle for driver to continue being mobile. Liaising with the repairer to ensure that the work is done correctly, cost efficiently, and as quickly as possible. This is very, very important. If you have chosen vehicles that are not supported as far as parts, as far as maintenance is concerned. If you've chosen vehicles that are not so popular in your country, for whatever reason you would have used to choose those vehicles at selection stage, but the point you face here is that the vehicle has had an accident, needs to be repaired, and the repairer says there are no parts and it's going to take 6 months to repair the vehicle. You are in trouble in this case because you could have bought another vehicle with more availability of parts. It's also important to record the accident and circumstances appropriately in the insurance database. So you need to have a database and understand what exactly happened. You may have different occurrences or incidents that resulted in an accident. You also need to understand that these need to be listed, all of them. What are you claiming for? What has been reported? Is it a windscreen or a driver hit third party or hit an animal and so on and so on? You can't be having driver hit third party appearing 3 times per annum, the same driver. He either shouldn't be driving for your company or should be trained so that he drives better. So you need to have an understanding of those repeat claimants, as I refer to them. So when people start having claims over and over again, there's an intervention from the company that's needed. Following up on payment of claim and recovery from third party is applicable. So the accident management program needs to cover that clearly. You may be shocked that if your driver has had an accident, by no fault of his, the insurance company may ask for an excess, while at the same time they are pursuing the third party who hit your driver. They may not always tell you that the excess that you had paid has now been recovered. Now it's 3 months or 6 months later. That excess has been recovered from the third party, so you need to keep in touch with them, make them aware that you are fully aware that you are not responsible for that excess. It should be paid back to you. It is due to you. Now on driver safety, you need to have a fleet policy that details unacceptable driver behavior, includes such issues as seatbelt use, cell phone use. Cell phone use is the biggest killer today. It is the biggest contributor to road crashes. Driving education is important and training programs. Enforce consequences to policy violations. Drivers should sign related policy documents. We've already spoken at policy. We discussed how important it is that drivers sign the policy. You need to develop a risk management program that identifies high-risk drivers, tracks driver behavior, and provides safe driving training and education. Encourage, recognize, and reinforce appropriate safe driving behaviors with rewards and incentives. Establish and enforce an accident reporting and investigation process. Your company policy should clearly guide drivers through their responsibilities after an accident. They need to know exactly what they need to do after they have had an accident. Establish an accident review committee. All accidents should be reviewed to determine cause, fault, and preventability. Inform drivers of their responsibilities after an accident, if there's payment that's due to them, or if they can't drive for while investigation is going on. That should have been listed in the policy anyway. Use a pre-approved repair shop to expedite the claims process. Benchmark accident management programs with such metrics as average cost per repair. It's important that this is done in your own currency to understand exactly how much accidents are costing your company. And also, we need to have an understanding of average repair turnaround time for certain kinds of damages in vehicles and average rental days per collision claim. So for every accident that has been there that requires that there's a rental that goes out in order to keep the driver mobile, there's a cost to that. So that needs to be quantified and put in rand and cent terms. Third-party claim efforts can be measured via metrics on costs actually recovered per claim. I've mentioned this point earlier on, that it is important to follow up on third-party claims and what their responsibility is and try and recover from the insurance underwriter whatever you may have paid as a result of that accident. And at this stage, I can safely say that we've actually broken down what risk management contains and how it needs to be managed in your company going forward, and how it needs to be planned for that matter and executed. So this is all I had in this lecture, and I'm quite sure that now you understand how insurance works. I'll see you in the next one. Thank you very much. Bye-bye.